Transferring funds between modern financial applications often involves navigating specific routing rules, platform limitations, and account connectivity requirements, especially when moving earned wage advances from an application like EarnIn directly into a peer-to-peer mobile wallet like Cash App. Managing day-to-day liquidity requires a clear understanding of how these distinct financial platforms communicate with traditional banking infrastructure. EarnIn operates primarily as an earnings access service designed to bridge the financial gap between pay periods by letting users cash out money they have already earned. Cash App functions as a mobile payment service providing digital wallet capabilities, debit card issuance, and peer-to-peer transfer options. Directly executing a transfer from the EarnIn platform into Cash App requires looking closely at how EarnIn disperses funds. EarnIn typically requires users to link a primary checking account where regular direct deposits from an employer are received. The platform generally restricts users to a single linked external bank account for routine, automated clearinghouse transactions and repayments. Because Cash App provides routing and account numbers through its partnered financial institutions, some users attempt to use their Cash App routing and account information as the primary linked bank account inside EarnIn. However, EarnIn relies heavily on verifying regular electronic direct deposit patterns, payroll timelines, and electronic timesheets to calculate available earnings. Using a digital wallet account as a primary direct deposit target often triggers compatibility complications or security flags within EarnIn's automated verification systems, as these systems look for traditional employer payroll deposits rather than peer-to-peer wallet transfers. Attempting to bypass direct account linking by using a Cash App debit card faces additional hurdles. EarnIn supports debit card linking primarily for verification and expedited transfer fee processing, but outgoing cash-out requests are strictly governed by the designated primary bank account rules. An alternative method for moving funds involves routing the EarnIn cash-out to a conventional checking account first, and then transferring the money into Cash App. This multi-step approach ensures that EarnIn successfully processes the earnings retrieval without triggering security blocks related to prepaid or digital-first routing numbers. Once the funds arrive safely in a standard traditional checking account that is already linked to Cash App, moving the money is straightforward. Opening Cash App, navigating to the Balance tab, selecting the Add Cash option, and entering the desired transfer amount completes the transaction instantly. Alternatively, linking the traditional debit card associated with that primary bank account to Cash App allows for immediate debit card funding. Understanding the timing mechanics of these transfers helps prevent unnecessary overdraft fees or processing delays. EarnIn offers standard ACH transfers, which usually take 1 to 2 business days to land in a traditional bank account, alongside expedited options that move funds within minutes for a small fee. Once those funds sit inside a conventional checking account, moving them into Cash App via a debit card happens instantaneously, whereas standard ACH transfers from the bank to Cash App can take a couple of business days. Security protocols across both platforms also dictate how smoothly funds move. EarnIn monitors account activity to prevent overdrafts and ensure repayment occurs seamlessly on payday. If an external account or routing number changes frequently, the system may temporarily freeze cash-out privileges until identity and payroll consistency are re-established. Maintaining stable banking information reduces the likelihood of interrupted access when emergency cash needs arise. Evaluating the fee structures associated with both platforms ensures that moving money remains cost-effective. While standard transfers on EarnIn are free, choosing expedited delivery incurs processing charges. Similarly, adding funds to Cash App using a debit card is typically free, but instant cash-outs from Cash App to an external bank account carry a percentage-based fee. Factoring in these potential costs prevents unexpected deductions from accumulating across transactions. Properly setting up financial architecture between wage advance apps and digital wallets eliminates friction during urgent cash flow adjustments. Keeping a primary checking account anchored to EarnIn while utilizing traditional bank transfers to bridge balances into Cash App remains the most reliable pathway for managing personal liquidity without running into automated system restrictions.